Hello, friends. Welcome to Level Up, and I have news to share with you today. I'm Winnie Sun, your host, an award-winning financial pro, a Forbes contributor, and a CNBC council member. Here on the show, we always want to keep you on top of the latest and most relevant business news. And let me just tell you, the last few days have been crazy here. The biggest news, if you haven't seen this already, is regarding a bank called Silicon Valley Bank. In fact, it wasn't the only bank. There's also a couple other banks that are being mentioned on social media as well as financial news the last few days. But I'm going to just talk about Silicon Valley Bank in particular, or SVB, some people are calling it. To give you an idea, here's the background on all this. Okay, Silicon Valley Bank is a financial institution or bank here in California, namely in Northern California, Santa Clara, which, as many of you know, is like the hub of Silicon Valley. There's a lot of tech companies there, a lot of, healthcare, biotech, a lot of startups in that sort of Silicon Valley area. Headquarters is in a city called Santa Clara, and they're known for financing some of the biggest tech startups, right? Prominent startups. In fact, we read online companies such as Roku, bank there, Vox Media, also banks there. There's just some few that I saw really quickly mentioned on social media. But we know that this bank has been facing financial troubles for some time. Now, you and I may not have known, right? Unless you're looking through the financial statements each and every quarter and looking really, maybe if you were banking with them, if you were investing in them, maybe you were really paying attention to this. If not, the vast majority of Americans really weren't paying that much attention to it until the last few days. Why is that? So this bank amounts to about nearly half, about 50% of US VC or venture-backed startups as of 2021. So many VC firms, venture capital firms, use this bank. And in fact, the Silicon Valley Bank even calls itself the financial partner of the innovation economy. So that basically means that this bank is very much involved with much of the tech industry, especially startups in Silicon Valley. So you might say, well, how is that a bad thing, right? In the past, venture capitalists, technology and whatnot, startups, a lot of them have done well. Some of them haven't done well, but maybe it's something that really didn't impact your life that heavily unless you were invested in this sort of area. Well, unfortunately, it had a sudden, what they call collapse. And you might be wondering, well, what is a bank collapse? So let's talk about that a little bit, right? So what happens is, whether it be a small bank, a regional bank, a large bank, when you put your money into the bank, what happens to that money? Does the money just sit in the bank? Well, it needs to earn interest, right? How does it earn interest? Well, typically banks will take some of their reserve assets and invest it in lower risk investments such as bonds that pay a specific amount of interest, right? Fixed income, if you will. And with that, they also lend out some money to other customers, thereby earning interest. And so that's how they also gain interest and can keep their banking operations going, and also making sure that they take care of their investors into the bank, their customers. These things kind of work in cycle. However, though, recently, as you know, with the pandemic, which then led to supply chain issues and inflation, which now also led to higher interest rates, this cycle really got thrown on its head because a lot of tech companies, startup companies, weren't bringing in as much money or income or gain or whatever positive as they would like. Now, typically, this might not be the end of the world because most banks probably have customers of all different types. Some that are like business people, some that are in agriculture, maybe in the farming industry, some that are in tech, some that are in real estate, some in different industries. Well, because of the concentration of the type of clientele that Silicon Valley Bank had, they were unfortunately not very diversified of their assets and their customers, and that put them in greater risk. And so what you see now is that even though Silicon Valley Bank, isn't the hugest bank, I mean, they've got $200 billion in assets. So to give you an idea, compare that to a JP Morgan Chase, which is probably like $3.25 trillion or so more in terms of assets, right? Significantly smaller. $200 billion is a lot of money, no doubt, but compare that to some of America's largest banks, still consider a pretty small bank. But it's still important to talk about why people are so nervous. In fact, if you watch the news today, or if you've been on social media, you've heard of people going to their local banks and regional banks and trying to get out money because they're literally worried and scared of whether or not they're going to have access to their money. So we talked about that. It just sort of happened in that way where, the bonds that the bank invested in, the interest rate was lower. And compared to inflation, right? And now with interest rates going higher, it made it so the bonds that they owned decreased in value. And that wasn't a good thing because the bank needed to raise some money to pay off people because people were worried they needed to get their money out. They needed to make payroll for their employees. They needed to take out more money than the bank had in reserves at that time. And unfortunately, it just became a real big issue. And then people who had assets at the bank started to panic and not only pulled out their money, but told others to pull out their money. So it was just like too much at one time because these bonds, if they had been held to maturity, the bonds that the bank had purchased, it probably would have not been this bad, right? But it was just sort of everything happening at once. That's why it feels like it came out of nowhere over the series of just a matter of days. But it was sort of that continuation of issue. Now, for those of you watching, you might say, well, first off, I don't bank at Silicon Valley Bank. Second of all, should I worry about my money? So here's what I want to talk to you about. This is really important. If you bank at a bank like I do, many of us bank at a bank, right? If your banking account has less than $250,000 in the bank account, you should not lose sleep. You should be on your way. You should enjoy your meal with your family. You should do whatever that makes you happy and go to work and do all that stuff. Because if it's under $250,000 at the bank, well, you have good old FDIC insurance to protect those assets. The government will insure that with FDIC insurance. So that's key. Now, suppose you have over $250,000. What then, right? Well, it's per title and it's per banking institution. So if I have an account, my husband has an account, and my business account, if all three of those accounts is under $250,000, or let's say $240,000 each, they'll all be covered under FDIC insurance. So unless you have over $250,000, you should breathe. You're gonna be okay, right? Now, what if you have over $250,000 at the bank? Right? Now, this, of course, remember, FDIC insurance covers things like your banking account, your checking account, your savings account, and things like CDs, certificates of deposit, CDs, right? Timed investments, things like that. Now, what it doesn't cover is things such as stocks and bonds and mutual funds and investments and things like that. So here's what I would say. If you have more than $250,000 worth of cash in your bank account, then you should definitely be aware that you may not be completely protected by FDIC insurance. So I would suggest considering, number one, maybe taking a portion of that and moving it to another bank, another financial institution, so you can have a new umbrella of $250,000. Or if you have even more than that, go to another bank. However, I would say this, why do you have so much money in the bank? Let's be honest. Banks are really best for like cash reserves that you need right away, maybe for a payroll or things like that. If you need that much, then great. But if you don't need that much in the bank, I would suggest to take some time and meet with a financial advisor, a specialist, go through and see if there's other ways to diversify your holdings so that it's to your benefit, right? You diversify your investments, the types of things you're invested in, where you're invested in, as well as diversifying your risk as well. So that would be my suggestion. Take a look at your financial statements, go online, take a look. And do you know, one of the things that I was reading too, why this became such a big issue so quickly too, is unlike back in the day, right? You would actually have to go to the bank and get your money. That sort of like a lot of people would go to the bank and grab their money. So that would sort of be like the old school bank run. But nowadays it's so easy. People go on technology, they just transfer money out, like online banking or ACH or Zelle or something like that. And boom, the money goes out. And so it sped up how quickly the money started to leave this particular financial institution. And this isn't the only one. There's others as well. And in fact, we're seeing today from the financial markets, on social media, a lot of people are looking at other regional banks and whatnot. So now you have less than $250,000. you can breathe a sign of relief. Make sure just to check how your account is titled, right? Make sure that you know how that's titled. And while you're at it, if you have a lot of money in the bank and it's maybe not under your living trust or something that has a beneficiary, talk to your banker, reach out to them and just say, hi, I want to set up a beneficiary designation on my bank account. Sometimes it's called TOD, transfer on death. They can do that. It's free. You just got to, get the paperwork on it just to make sure that things are titled correctly. Really important. But with that, there's going to be probably more news in the coming days. You saw President Biden come out today talking about we're going to make everybody whole. And so for those who are at Silicon Valley Bank, and if you had more than 250,000, you shouldn't worry so much because the Biden administration said that they're going to cover all of the cash reserves. So that should put people at ease. So the regulators are going to come out, make things whole. And this is really important to know. Silicon Valley Bank, they're going to, about $175 billion of their customer deposits is now under the control of federal regulators. And so the Biden administration has promised to make everybody whole. Now, one thing I want to share with you too, let's say you don't bank there and you're like, is this going to come out of my tax money? Like, who's going to pay for this bailout, right? Well, the good news is not you and I, not U.S. taxpayers. The Biden administration has said that this will be bailed out from the fees that banks have had to pay into the FDIC insurance deposit insurance fund. So good news, right? That is really, really good news. So hopefully hearing this, you can breathe a little sigh of relief. Definitely take a look at your financial statements. I think that makes a lot of sense. If you have too much money in the bank, talk to a financial advisor, see what you can do, find out your different options. And of course, remember the key thing when it comes to investing or in general, right? Make sure you keep diversified, make sure you're realistic, don't be overweighted in something that you're not that comfortable with. And that's really key. But most importantly right now, I hope after watching this, you won't panic, right? But make sure you're not overly concentrated and talk to someone so they can walk you through it. This is a really good time to do it, especially for those of you who are tuning in from California. I do know many of you, like myself, have gotten a sort of a little gift from Governor Newsom and the IRS in that our tax filing deadline has been pushed out almost half a year. So speak to your financial advisor. That's what they're trained to do, and they'll give you some more personalized advice. I think that's key. Be careful about getting financial advice on social media or other platforms like this. It's critical to do this on a one-on-one basis. You want to make sure that you have your money managed well and you have a good financial plan that makes sense for you, which is key, right? And then so one question I had, someone had called in and asked about is saying that, well, Winnie, okay, on the flip side, do you think I should be jumping in and investing in the banking industry now, right? Again, so my answer to that is speak with a financial advisor, get professional advice, do it right, don't get greedy. And there's a saying in the financial industry, which is don't chase a falling knife. Think about that for a moment. You don't want to chase a falling knife. You could really get hurt doing that. I don't want to see you getting hurt. But I hope that you found this helpful. If you do, do me a favor and, of course, like and subscribe so you can stay up to date with our latest content. I want to thank you so much for watching Level Up Live with Winnie Sun. And if you enjoyed this video, don't forget you can find full episodes of Level Up with Winnie Sun on NASDAQ, Amazon Fire, Samsung, Roku, but especially on NASDAQ. Additionally, and be sure to check out Yes Factor with Winnie Sun on Apple Podcasts. That's with the LinkedIn Podcast Network. And with that, thank you so much for your support. I'm excited to share this bit of information to you. I hope that you feel a sigh of relief. Do know I do suspect more banking news like Silicon Valley Bank to come out in the next few days. So do not panic, but take a look at what you have. I think that's key. Make sure you understand FDIC insurance and all that. And if you're not sure, you can actually check out fdic.gov for more information and more details. But we will have more news for you this week. I look forward to seeing you again tomorrow. Take care and be well. Bye-bye now.